welcome back to another lecture of the course series. Just as a quick survey, how many of you have been following along throughout the course series so far and have seen the previous lectures? And if not, let me know, and let me know if this is your first lecture as well in the chat. And I'll continue to read through those so I can kind of cater this class to the different crowd that we got in here as I continue throughout the introduction. So for those of you who don't know me, this is Tostie here from Only Options Trades, and you are taking part in a beginner course series, and I'll show you guys where to find the rest of the lectures. So this course series is one of the most detailed that we've ever done, and I'm documenting it all here in this beginners tab for you guys to follow along. So here you can start back with part 1, where we talked about the basics of options. Next, we talked about more advanced parts of options with the Greeks and setting up thinkorswim. In the last lecture, or in 2 lectures ago, we started talking about candlesticks. And in the lecture that was just recently posted, we talked about support and resistance and supply and demand. So I'll put that one in the tab, but it is public on YouTube now. So we got 4 lectures under our belt so far, and indicators is going to continue to build on the knowledge that we have so far. So with the crowd we got in here, it seems like we've got some who have been in here for a little bit. We got some people with experience. So another diverse crowd, which is great. So yeah, I'm going to just start going through some of the slides that I have here. So again, as I was talking about, this lecture is part of a course series. This is kind of the more simplified diagram. But ultimately, last week we had candlestick, or 2 weeks ago, we had candlesticks, then we had support and resistance in the middle of here. This week we have indicators, and then in the next week, we have patterns and trends. So today we're going to talk about some common indicators, but mainly I'm going to work on focusing on strategy with these indicators. So I'm going to kind of briefly define indicators, talk about how you should be understanding them and what you should think when you see different signals on indicators. And then we're going to talk more about strategy towards the end of this lecture. And the goal of this course series is to create successful traders who can find the highest probability trades and act on those opportunities with confidence. I truly believe that this course series is absolutely fit to succeed in achieving this goal for each and every person in here. And as long as you're diligent in going through the videos, performing, homework and practice, when I say that it's reasonable to be doing so, I think you guys will leave this course series significantly more knowledgeable than you were when you came into it, and also with a lot more important experience in reading charts and understanding prior history of the market. So I think with that being said, I just want to give a few more remarks before we get started. As always, all of my lectures have a lot of information. This is because I do my best to pack as much information in a small amount of time to give you guys the most value for your time, because I know it's late on the evenings. Not everybody wants to stay up super late. So I appreciate everybody that's here. These lectures are so much more fun when we have live guests. So as always, there's going to be a lot of information. Keep that in mind. But what I do to try and make it a little bit more digestible is I start every lecture on a little bit more of a basic level. And that's just to warm us all up to thinking about this topic and start beginners in a place where they can get built up throughout this lecture. And again, I want to point out that as we discussed in support and resistance, as well as the candlesticks lecture, that indicator signals and any kind of pattern we see with indicators are not the end all be all. There's no one trading system or one fact of trading that will give you a 100% success rate, unless you have insider information that you know to be true, which is illegal. So with that being said, you need to combine all of the knowledge that we learn in these lectures to develop a trading system and a trading strategy. And we're going to talk more about combining these aspects throughout this lecture and in much more detail in a lecture of its own and potentially 2. So again, I just want to remind everybody that I was in each and every one of your shoes at one point, whether you know nothing, maybe you know a little bit or a little bit more. I know exactly what it's like to be in that situation. So I'm going to do my best to cater the content that I deliver tonight to everybody of different skill levels, different learning styles, all that good stuff. So with that being said, does anybody have any questions before we get right into it? Everything makes sense so far? Cool. I'll take the silence as a yes. So we're going to skip this first section on setting up indicators. If you want to see how to set up indicators, refer to the beginner course series lecture part 2 towards the end of that lecture. So around minute 50, I just edited this message to include this. Around minute 50, we talk about setting up indicators and thinkorswim in general, which is the platform that I use to trade on. And setting up indicators in general is relatively simple. So I don't want to spend too much time on it, just because if you have questions, feel free to reach out, but I don't want to spend time in the lecture on that. So I first want to talk about one of the most important and fundamental indicators that will likely get its own lecture in the future. But for now, we're just going to briefly outline it and talk about it and its significance. And that's going to be volume. Volume represents the amount of shares traded in a given time frame. And it's important to note that the stock market is a zero-sum game. which means that if I want to purchase any share of any company or any security in the stock market, somebody needs to sell that share to me. And one of those transactions represents volume, or a one count on the volume, right? So if I am buying a share, that adds one to the volume. It's just the amount of shares traded in the specific time frame. If you look to the bottom of these charts, you can always usually see these volume bars at the bottom. Sometimes they're depicted in different ways, but these bars down here represent the volume bars. And you can see this histogram has some high points and some low points, and we'll talk a little bit more about that in detail. One thing that I want to outline is different timeframes have different volumes. So for example, we've talked about this in previous lectures, but the larger the time frame, the more data that's encapsulated within that time frame. And just to give an example for those who haven't gone over this concept with me so far, let's take a look at this chart really quick, and I'm going to clean it up real quick. So we take a look at the weekly time frame. If you think about it, these weekly candlesticks represent 1 week of trading data. So if you think about it, right, this is 5 days of trading data, which is a good amount of volume that should take place in one of these candlesticks. For example, you can see this volume number down in the bottom left corner, which might be a little bit small for those on mobile, but I'll just read it out. So some weeks this stock has 120 million volume, and others it has 61 million. So that is kind of the weekly range, right? And if we look on maybe the hourly chart, volume is going to be significantly less, right? 1 million, 1.5 million, right? So the weekly represents 5 days of trading data, right? So that's going to encapsulate a lot more volume, a lot more price action. So that's why we always say that the larger timeframes or the longer timeframes represent a more significant signal, whatever time frame you're looking at, because in that case, you're looking at more trading data, right? More volume occurred to create this candlestick as opposed to something on a shorter time frame. And this is a concept that we hammered down a little bit more in the candlesticks lecture, so I'm not going to go too deep into it, but ultimately just wanted to kind of outline that very briefly. So volume represents what buyers and sellers are doing at a given point. So one of the scripts that I liked to use in the past is this buy versus sell volume script. And you can see previously these volume bars were just kind of monochrome. Now you can see the difference between buying and selling in any specific candle. And this script helps me to understand the strength of buyers and sellers at a given time. And again, these are still the same volume bars. There's no difference. This isn't something that I always use, but just something to keep in mind. And this is posted in the server if you're looking to use it in the Thinkorswim scripts tab. So I just want to talk a little bit more about volume while we look at the charts. Think about buying and selling in the market as a game between buyers and sellers, a game of tug of war, excuse me. What that means is buyers and sellers are fighting for price to do two different things. Buyers want price to go up because if you think about it, if you buy a stock, you want that stock to increase in value so you make money, right? Pretty simple concept. And sellers are selling because they don't think the stock has any more room to go up, or they want the stock to be going down. And in that case, sellers want the stock to go down. So you have to be paying attention to volume because it represents the activity of traders at specific levels. So for example, this chart MU is one I wanted to highlight. Last week, we talked about support and resistance. And if you take notice, I found this support level right around this 48 area. And you can look at how we've reacted to this level in the past during COVID. These COVID lows, we saw multiple reactions off of this area. Same thing here, right? Multiple reactions off of this level. And I noticed recently we came down to this level and we saw an increase in buying activity, right? Which is denoted by the increase in volume. And I'll zoom in a little bit more so you can see it very clearly. I'll make this a little larger, right? So note, we saw that this support line, which we talked about in the last lecture, kind of more definitions on those. This support line where we saw that buyers have stepped in the past, right? If we scroll over here, you can see sellers were stepping in, then buyers were stepping in, right? So think of the support line as kind of a line in the sand where there's interest in trading a specific stock. Previously, in the last few months, we had come down to this level and we got a significant bounce on increased volume off this level. And this week, price has now revisited this exact same level. We saw last week that we had a significant increase in volume over the previous week off of the same level. And this is something that has actually induced me, or part of my thesis that has caused me to have to go long on this. And when I say have to, but I have chosen to go long on the specific stock, MU. And I detailed a few more reasons in my watch list as well. But just looking from a volume point of view, right? What I'm seeing here is previously we come down to this level, we see a significant increase in volume, right? That's to me is showing the increase in buying and selling activity at the specific level, right? And when we're holding above this level, that indicates to me that buyers are strong at this level. So when we come back down and revisit this level, you have to assume that buyers are still going to be waiting to purchase at this level. considering the last time we visited this level, we saw a 30% bounce in the underlying, which is incredibly significant, right? So again, we're coming back down to the significant support level. We're seeing that volume come in on the weekly time frame, which indicates to me that buyers are once again interested in buying this stock at these levels, right? We're starting to see some of these downside wicks, which indicates the presence of buyers once again. Of course, this candle is still very open. We're one day into the week, so this candle means nothing right now, but so far looking promising to start the week off. So this is one example of how I use volume to look for specific areas of interest. Another thing that you can be looking at is volume-backed breakouts. And Tesla is one of the most incredible case studies on this. And just to show you guys what I mean by that, take notice of how Tesla reacted to this support level right here. Notice this support zone, and I'll make it a little bit more clear, right? Again, I know not everybody might not be clear on what exactly support and resistance zones are. I'm not going to spend too much time talking about them tonight just because I promise you, if you review the previous lecture, there's so much information on them that you'll be so happy. But there's a support zone here where sellers were previously interested. And support and resistance zones are essentially synonymous. When we're trading below these zones, they're resistance. When we're trading above these zones, they're support. So this zone, which was previously resistance, should have acted to support price here when we recently traded it. However, price not only closed at the, and I'm going to zoom in so we can all see clearly. So price closed into this support zone with an incredibly bearish candlestick, right? It's a large body with the candle closing at its low. That's a very important signal for strong bearish momentum. This candle also closed on increasing selling volume, right? There's not a single sign of buyers within this candlestick, not one. So when we're closing at a strong support with increased selling volume, with a candle closing at its low, this is no indication of bullishness. Whether you were going short or trying to go long or whatever it might be, at this point in time, there was not a single reason to be going long on this stock. And obviously, it's easy to say this in hindsight and look back and say, oh, look what you could have done, right? But this is a very important case study because this type of pattern will repeat over and over in the market, whether it's an upside bullish breakout intraday, a downside bearish breakout on the monthly or weekly time frame. These patterns will repeat. And when you see price accelerating into a significant level of support on strong selling volume, and then you see a strong continuation below that level on further increased selling volume, that is no indication of strength in buyers. And there still is no reason to be going long on Tesla if we're strictly looking at volume, right? Selling volume is increasing on the way down, which is not something that you want to see if you're looking for strength of buyers, right? And if you're looking to go long, you need to have buyers. So that's just one thing that I wanted to point out, 2 case studies in using volume. Again, volume is arguably, I don't even want to call it an indicator because this is something that is fundamental to a stock. Volume is price. Without volume, there is no price because volume is the trading activity that moves price. So in my opinion, this isn't an indicator, but this is just the chart. But I want to bring it up in the indicators lecture because I think it would be a disservice for me to not mention it, give an explanation into it, and kind of set us up for a future lecture talking about volume. So I'm going to step back and address some of the questions here. We got Flips in here. What's up, Flips? I'm going to give Flips. I know Flips is a big fan of looking for volume back breakouts at open. I mean, this is this guy's bread and butter. I don't know how he trades market open. Literally every day this guy's trading market open, and I don't know how he does that. So I don't know if you want to say a thing or two about that, Flips, but yeah, feel free to step in and mention anything regarding that if you want. Yeah, we love you, Flips. Are those support and resistance zones because it bounces off of that point the most? There's a few reasons to draw support and resistance zones at specific levels. In this case, this level was a zone that was bounced off multiple times, indicating the presence of selling activity at this level. I don't always draw my support zones based on that. Sometimes I draw support zones based on one strong pivot. For example, I might draw a level right here, considering we had a significant wick off of this level pre-COVID, or actually after the COVID run, and we had a wick off this level just recently, right? So this would be a different type of support zone for me in my head. This would be more of a pivot rather than something that had been tapped multiple times. How do you know if the price is going to bounce at a support level or break that level? Well, to be completely honest with you, you never know 100%, right? If we all knew every single time, we'd all be rich, and likely we wouldn't need these lectures because we just know. But unfortunately, there's no way to know 100%. But there is a few clues to know and be looking if a price will bounce off of a level or not. What I like to look at first is how is price acting as we near this level? In this case, the weekly candle that closed right on top of this level showed little to no sign of strength, right? Again, we have a very bearish candlestick closing at its low, which is incredibly bearish on increased selling volume. So that initially is a sign to me to be cautious. Obviously, again, in hindsight, it's so easy to say, oh, you should have never long this candle. But, you know, I could have been completely wrong and it could have bounced right back up. But in this case, when you see a candle such as this is no indication to be going long, right? You look at past performance as well. A bearish candlestick closing on its low doesn't typically result in a bounce, right? Again, bearish candlestick closing near its, well, this one resulted in a bounce. So you can see it's not always going to be perfect, right? But if we see more bearish candlesticks closing on their low, they don't always result in significant bounces, right? Here we see we got a little bit of a bounce. This was a bearish candlestick closing on its low with an upside wick. We got downside continuation, right? So there's different examples of all of it. Ultimately, when we saw these candles closing at their low, we saw further downside, but it's safe to say that this is not always going to work out. But in summary, right, when you see a candlestick closing on its low on increasing selling volume, that is not a sign that you should be going long, right? We can even look, I'm sure, something at SPY over the past few weeks just to take a look at this, right? This hourly candle closing on its low on increased selling volume, right? That was close to the top, right? Another hourly candle closing on its low below a support zone, right? So there's so many examples of this type of action where we see candles closing near their low on high volume, right? And you might be thinking, well, this doesn't seem like high volume. If you look at the previous day's volume, that's far above the average. So important to keep that in mind. But yeah, that's just kind of my quick lesson on volume. So yeah, Aaron says, I can tell there are no buyers because of the bearish candlestick in a lower volume than the candles before. Essentially, it's actually the higher volume relative to the previous candlestick. Because if you take a look back, this candle, I'll zoom in a little bit more. This candle right here actually has higher volume than the previous candlestick. So that's telling me that not only is there no buyers, but there's more sellers as we approach a support zone, which typically, if you approach a support zone, you don't want to see more sellers into the zone, right? You want to see buyers start to get some interest, right? You can see here, as we approach this 170 zone, we started to get some downside wicks, and ultimately we closed the candle with a nice downside wick and a candle closing decently close to its high on low volume, indicating the presence of buyers at this level. But we got no such reaction when we approached 150. So if you want to play the balance, what would be the ideal time to enter, preferably for scalps? I mean, if you're scalping, me personally, I like to enter at the actual level, because if you think about it, these levels are where institutions are going to be trading. Institutions don't typically trade the middle of ranges, they trade the extremes. So in this case, if I'm scalping, I'd be wanting to either long a hold of 150, right? If I see, you know, maybe some level twos light up, or if I see some volume start to come in near this 150 area, I'd be maybe looking to scalp long, right? Or if I see a quick flush below 150 on volume, I'd be looking to scalp short, right? So in this case, let's take a look at how this played out, right? So this is that 150 zone. The day after we first tested it, we opened the next day, we opened below it, retested that zone a little bit. Oh, I actually, now that I think about it, I actually did go short this day, which is really funny. This was actually the last time I traded Tesla. That's really funny. I actually did go short right here, and I sold, I think, here. And I was so pissed the next day when it was, actually it wasn't the next day, but next few days when that contract did 1,000% and probably more since the last time I looked at it. But yeah, so actually I can say that this was somewhere that I did execute a trade on this break below 150 and retest. So yeah, that actually was an actual trade because I took that trade. And if you don't believe me, I'll show you the trade history. But yeah, so that's kind of an example of a trade that I might take, right? So when we had broken this 150 at open, right, we'd open below it. We retested this with some upside wicks into the zone that we drew, right? We see this rejection develop. It doesn't matter how you look at it, right? So for example, okay, that zone's really ugly. I'm gonna just leave that really quick. So the way I would take this trade, and did take this trade, is you draw your opening range, right? So for example, that's gonna be something like this, right? Your opening high, your opening low. And I'm kind of getting this lecture in a tangent that I didn't expect to go on, but that's fine. Right, so you draw your opening range right here. So price quickly comes to the low of this opening range. Well, actually, technically, if you draw this opening range, one common way to describe this price action is the market in breakout mode. So if you draw a range on this first 5-minute candle, so essentially I'm just drawing a line at the high and low of this first 5-minute candle. Notice how at the very next candle, tests both extremes of the range, and it actually breaks it in both directions, which indicates to me that this specific stock is trying to break out right now, and it's trying to figure out what direction it's going to go. So it tries the upside breakout, it tries the downside breakout. Ultimately, it ends up with the upside breakout, right? So it tries this upside breakout. Usually, when you see the market in breakout mode off open in a trend down day, right? You look at pre-market, trend is down. You see this this trend from pre-market. You see this breakout to the upside. To me, my first instinct is this isn't real, right? We still didn't crack the previous high a day with the close above. So usually I'm looking for that breakout to be fake in this case, right? And that's exactly what I did. So I didn't short right at the top, but you see this candle closing near its low with a long wick to the upside. That's not necessarily an indication to go short right off the get-go. Then you see this very next candle close back within the breakout range with the candle that's not incredibly bearish, but you close back within the breakout range. So this is now a fake breakout. So bulls are trapped above this high of day. So now bulls are looking to reclaim this level as soon as possible, or else they're going to be forced to stop out. So you see this break below, then we get a retest of this breakout level. And I believe I entered somewhere around here-ish on short. I can't remember. It was a few weeks ago. And at that point, that's kind of your green light to go short, right? So you got this fake breakout above, you have your opening range, market's in breakout mode, trying to break the high and low of this range. You fake out above, you get the close back below, indicating the fake out, and then you get the move lower, right? And even if you didn't short while still within this range, look at this specific candlestick right here. We break the low of this range, volume increases, right? When you're looking at volume, it's important to note that volume is a relative scale to be looking at, right? So high volume for one stock might be very low volume for another stock. So for example, in this case, volume was 2.6 million and 1.7 million on this breakdown, right? On these two breakdown candles. On other stocks, that might be insanely low volume, right? Just important to keep that in mind. So when looking at volume, you have to compare it to the specific stock alone, because different stocks have different average daily volumes, different average daily moves. So you have to keep that in mind, right? I like to say that every stock has its own personality, and that's just kind of part of it. So volume is a relative measurement. It's not absolute in the sense of it can be compared to each and every other stock. Now, I also will say that volume in orders of magnitude can be compared. Like, for example, Tesla trading 100 million volume in a day is way more significant than some penny stock trading 1 million volume in a day, right? So important to keep that distinction as well. But yeah, so I don't know how we started talking about this in the first place, but that is a trade that you could take based on volume and price action in general, right? So definitely a tangent that I didn't expect to go down, but I think this is a valuable example to highlight. So again, just a few concepts that I wanted to quickly recap, right? You can look at this opening range that the market created on the 5-minute candle, right? We have a high set and a low set, very indecisive candle set off the open. And usually I personally am not a trader off the open. I don't have the heart for it. Somehow Flips is trading off the open literally every day and printing. I don't know how he does it. I guess I just got to follow his alerts if I want to trade off the open, because that guy, I don't know. He must take a lot of pre-workout before the market and he's just ready to go. But I see this opening candle and it gives me a reason to wait, right? I see this next 5-minute candle. We see the market test both ranges, upside and downside of this opening candle. See this fake out to the upside where the market fails to close above the high of the day. It rejects this pre-market trend. I had it drawn better earlier, but we'll just draw it roughly like that. It really connects a little bit further to the left. Rejects this pre-market trend. We see sellers beginning to step in above this range with these upside wicks. We close back within the range right here, then retest it for a move lower, right? So that is your signal to go short. If traders are going short on this specific setup, some traders are going to have sell stops set below the low of this bar. So for example, once price breaks below this low, they're going to be sellers because their limit's going to trigger. Some sellers are going to be setting limits at this high, right? At this retest. So there's a few places where sellers might take entry, right? So you have to be keeping that in mind as well, where people are going to be entering and exiting, and sellers are likely to exit their position at this low, right? Because this is the obvious support. But when you see this low break, which should be some support, right? Notice how we got this significant buying here early in the day. When we break below this low on increased volume, that is your sign that's telling you sellers are no longer here like they were earlier, right? Here we saw selling very obvious, but now we revisit this level and we break it on increased selling volume, right? And that's when we get a really nice downtrend that develops throughout the rest of the day, right? Obviously, this is in hindsight. I can look at this and say, oh, look, Tesla dropped 10 points in one day. Look what you could have done, right? This is not always going to happen. This is something like a 7% move intraday. Yeah, 7.3%. No way that's always going to happen. And you're not always going to catch that whole move. For example, I was in here and out by around here, right? So I didn't catch nearly the whole move. I barely caught any of it, right? But that's just the name of the game. Sometimes we're going to have trades that don't always make sense. So you got to keep that in mind. And we're going to see this continue to drop, and we're going to say, oh, why didn't I hold? Well, you didn't hold because you're trading right above the support, right? It makes sense to take some profits here. And in this case, I had, 2 or 3 contracts, I think 3. So I wasn't in very big, so I might as well just take my profits. But that was a really long-winded explanation on volume. And honestly, I'm not going to lie, because we went so far down this road talking about volume, I don't know what you guys think, but I almost want to continue and just talk about different intraday setups, looking at volume. I don't know what you guys think about that. What are your thoughts? If we turn this lecture into indicators part 1 and do part 2 next week? Okay. If there's nobody in favor, please feel free to let me know. I know it would be false advertising.
I would love to talk about that too. That would be nice.
Flips, you want to talk? You want to do volume with me the rest of the day? Because honestly, I could listen to what you have to say about trading volume at open. To be honest,
that's exactly how I traded today.
All right. Well, it seems like everybody's trying to see volume. So yeah, Flips, I want to hear about your strategy and how you use volume at open, because honestly, I need to learn that.
Go to NVIDIA. That was the first trade of the day.
Okay.
So in NVIDIA, you can see, number one, you can see the bear flag build out in pre-market. Correct. That's the first thing that we were looking for. At the same time, I was watching SPX and NASDAQ, especially SPX was right on support. So a lot of people, I don't tell them to play SPX, I tell them to play SPY, because it's a little bit less riskier. And I told them if SPY breaks support, which is going to be, I think at that time was in the first 5-minute candle, if it breaks support, I'm taking NVIDIA puts.
Got it. I'll take a look at SPY.
Yep. So there's a bear flag on pre-market. Correct. And so the first candle opened below bear flag, and it retested exactly the resistance of the bottom of the flag without breaking over it. And once I noticed that the volume that was coming in, I was looking at flow, and on flow there was a bunch of orders for puts. So that made me say that the SPY is actually bear flagging to the downside. And I'm going to take NVIDIA, which was the weakest one pre-market. And they both paid. I know some people took SPY because, and then some people took NVIDIA. I always tell everybody, do not play the first leg, play the second leg. So the next time that we took NVIDIA was actually the bear flag that you can create after the first 15 minutes. There it is. And that's something that if you guys come to the lecture a lot, or to VC, we call it the H pattern, which creates like a bottom H.
I didn't know other people use that, bro. I thought I was the only one that said that.
Said that the H pattern.
Cool.
So when he broke below the H pattern, which is the bear flag, and he had that's it.
I'm trying to draw an H.
Yeah, there you go. And when he broke that bear flag to the bottom side, it had some look at that inverse hammer, the 5-minute inverse hammer inside the H. That one. Yep. So the last candle closed about 15 minutes after that. You can read candles. You need to know how to read candles. That's an inverse hammer. And then on the H pattern, the first candle that closed below the H pattern is actually an inverse hammers as well. That one. So those two things gave me a lot of indication that it was going to be coming down. I look at the volume behind it. Those two candles, especially those two candles onto the downside, was on higher. higher volume, which is more bearish, more sellers. There it is. You see how it goes up? And then, of course, that one is one of the highest candles. So that's exactly what we were looking for, that it was sellers on top of sellers. And that's when I called the other NVIDIA puts. That's the one that we took like a couple of them. And then we ended up holding one of them from like 199 to like $530.
That's so crazy, bro.
But it was only like one runner. I know I took like 3 out of my 5 at like 40%. I took one at 100%, and then I left the other one to see where we go.
So some people are a little confused on H pattern. Essentially, what it is, just to give kind of a brief definition, is what Madflipz is kind of referring to as an H pattern is when you see some move like this, right? So for example, at first it starts out with a strong sell down. So in this case, very significant sell down on high volume, right? So that's what kind of starts it. And that's also kind of the start to a bear flag, whatever you want to call it. And then this H part, obviously this is up to interpretation. If you squint a little bit, it looks a little bit more like an H. But the H essentially represents a weak bounce in buyers. So for example, you can see here, it took sellers 15 minutes to drop price from 150 to 145. 15 minutes to drop the price of a stock. What is this? 3%? Yeah, 4%. In 15 minutes, that's a massive drop, right? So that's going to take very strong sellers. And if after that move down, you don't see a significant amount of buying, that's when you start to see this quote unquote H pattern or bear flag or whatever you want to call it form. So here you can see again, right? We had those 15-minute sellers that stepped in very significantly. Then you form this bear channel, bear flag, whatever you want to call it. And this is where you're seeing that weakness in sellers, right? So again, it takes 15 minutes for price to drop 5%. Then it takes over an hour for price to reclaim 2%, right? So it drops 5% and takes quadruple the time to reclaim a quarter of that drop, which is so telling and showing you that sellers are very, very strong and buyers are not enthusiastic to be buying this dip. And that's something that you need to be keeping in mind, right? And again, volume is definitely telling the story here, right? You look at open, you see how high this volume is, right? All throughout open, volume is incredibly high. Once the bounce begins, volume totally tapers off for the most part. And again, this is a pattern that's common throughout the day. One thing with volume is at the open, volume is usually very high. And at the close, volume is also usually very high. That's just a typical pattern with volume. And you can kind of see how it makes this rounding formation, right? High at the beginning of the day, high at the end of the day, because traders are looking to see what the daily candles are looking like. So they see the previous daily candle close, then they make trades at open based on those closes. And they're seeing how the daily candle's looking like it's going to close and then make trades based off of that as well. Somebody also said you're confused what pre-market is. So just to kind of give you a complete definition on what pre-market is, any price action before 9:30 Eastern time is considered pre-market. So for example, all this price action from 4 a.m. to 9:30 a.m. is pre-market trading. So essentially it's when the market is considered to be not officially open. So at some hours during pre-market trading is limited. Like for example, people like you and I can't trade from 1 a.m. to, I don't know, 2 or 3 a.m. or something like that. And then it starts to open up to everybody to an extent, right? For some brokerages, but volume is a lot lower, liquidity is a lot lower. And yeah, so that's kind of what pre-market is, if that makes sense. And there's also after hours, which is after the market closes. And that lasts for like 5 hours, I think, 4 hours, something like that. Yeah, so it starts at 4 Eastern and then it ends at 10 Eastern.
Yep. The other thing everybody to notice was that after the first 15-minute drop, if you guys notice the bear flag that was building out, it was building on the volume is decreasing and the candles are not going up as strong. That means that there's sellers still in there. If you guys notice that they had the big pull, 15-minute drop, then the bear flag starts building out for about an hour. And if you look at the volume starts dying down. And when it starts dying down and you don't get the big spike back up, it means that there's not very significant amount of buyers. So if you guys are looking at volume as well, and then we look for the inverse hammer closing below the flag, and that was the next time that we took you see that hammer, it would not close above that flag, and then about 15 minutes later, the inverse hammer on right outside of the flag. It closed on the other side of the flag, on the bearish side, and that's when we took it again. Correct. So you just got to read volume not increasing with buyers. It was actually decreasing with buyers. So I mean that's a bearish sign. Is weak.
Something that I want to note that's actually kind of an interesting counter example to this is if you look at MU, a name that's in a similar sector, notice how you had a similar sell down at open, right? But all throughout the day, this buying was actually sustained. In NVIDIA, you saw that kind of H pattern get created, that bear flag. And you can see MU created some kind of a similar pattern on declining volume. But in this case, this specific stock broke significantly higher out of this flag and reclaimed this open level.
Correct. So
after flagging under for a little bit.
Yeah. So MU, what volume is telling you there, when you start reading volume, is that it's only buyers. So volume is buyers are slowing buying, but there's no sellers. And then the big candle, it broke on the opposite side of the bear flag, which exactly. So that's a determination that all those little candles that you see in between are actually buyers, not sellers. That exactly. That's the candle that tells you, oh shit, that's not selling.
So for example, if you were short on this setup, right, you weren't short on NVIDIA and you see a candle like this means it's time to stop out. So this means there actually is a lot of buyers down here, no matter how you are interpreting it. And if you're short, your trade is no longer valid at this point in time. I mean, obviously, depending on the type of thesis you're trading, but for the most part, right, your trade is invalid. And it's important.
You can look at MU chart and you can actually look at NVIDIA charts to compare next to each other. But those in between bear candles that you see in MU are actually, and this is something else that we need to learn how to read, is all wicks on the bottom. That means that they're all closing with buyers. They're not closing with sellers. You see NVIDIA, there's some red candles in between. And then those sellers between. Look at MU. All wicks on the bottom, that's all buyers.
Yeah, that's a very good point. You can notice the difference in price action, right? So here, there's these downside wicks indicating that sellers are trying to push the price lower, but buyers are supporting price. Whereas here, you have some downside wicks, but you also have red candles in the mix. And when you finally get a breakout of this range to the upside, price quickly reverses with that inverse hammer that Flipz was talking about, which represented his short entry, which was a sick ass entry. Good shit.
I think so. Something that I want to tell anybody who's listening: whenever you set up your trade plan, okay, this is setting up to be a bear flag. If it goes the opposite way, do not trade it. Don't say, "Oh shit, you know what? Let me get on calls instead," because now your trade plan is going out the door. You're just following whatever that stock is doing. So I had a clear plan that I was going to play a bear flag in NVIDIA. Now, if NVIDIA would have reacted like MU, I wouldn't have played the calls at all.
That's because you had your plan. Yep. That's a very good point, Flipz. Let's see what. So always, it's a funny name. Always attend Toastie's lecture says, so patterns in pre-market should be taken into account for market open. Yeah, personally, I'm always interested in the trends and levels from pre-market. Oh, Flipz answered your question. Oh, never mind. That was another question. But yeah, I'm always interested, and I know Flipz is as well. Always interested in multiple levels from pre-market. So I'm always interested in pre-market high, pre-market low, previous day's low, previous day's high, and any trends or patterns from pre-market. So in this case, you have a little downtrend, very evident from pre-market. Like Flipz says, you have a micro bear flag forming. And here, first candle of the day, we broke through pre-market low and yesterday's low in 1 5-minute candle. So that is really, really significant. It's indicating the strength of sellers. So that's another reason to just always be paying attention to what happens in pre-market. Even though it's low volume, pre-market can give you an idea of a range to watch out for. And this is something that a lot of traders are also watching out for, is especially people who are trading trends, they're looking for these previous days levels to be broken, right? Because if you think about it, there's going to be a trend that continues down. You need to break through this previous day's low. And if there's going to be a trend that continues higher, you got to break through this previous day's high. And if you don't see a significant follow through these specific levels, you're not going to see breakout traders take these entries, right? no matter how many times people think that all trading is done by computers, although a significant amount of trading is done by computers, you have to remember that people trade these algorithms, or people code these algorithms, right? They're not automatically coded. And you still have to keep in mind that human psychology will always play a role in trading, in charting, in technical analysis, in candlesticks. No matter how you put it, we're always going to see that aspect of human psychology be put into serious display on all these charts, right? And people going short want to see a nice break below these levels to get that confirmation to go short. And it's important to note that once we got this break lower, there was two even stronger selling candles dropping price $4, and Flips was short throughout that whole move somehow. You guys the goat for that.
Yeah, that paid fat in the morning.
Flips, I didn't get to trade this morning, but I'll have to stop in tomorrow and see what you hit at open, if you hit anything.
Yeah, I mean, not every day we take something at open. There's many times that the stocks are in between levels, meaning in between pre-market high and between pre-market low. Nasdaq, XPX are also in between levels. There's no resistance. There's no support. It's just somewhere in the middle, in the dark area. So when a stock is like that, I don't take it. I wait either for support or resistance to break, or I play the second leg. The second leg is the bear flag that we played on Nvidia. I wouldn't play the first 15 hours, like the first hour and a half. I wouldn't have played it and would have waited for the bear flag to form, and then that would have been my first trade in Nvidia. But because of today, I saw clear support being broken in the first 5 minutes, and actually those are the same levels that I have in my computer. When pre-market lows broke and the same level from yesterday broke, I was like, oh, I'm taking Nvidia puts, so I'm going to call those out. And those contracts moved like $160 in like 10 minutes. And that was just insane.
Crazy.
I had a guy message me. He's like, hey, man, the first 30 minutes of the day, I'm up $7,000. I'm going back to sleep. I was like, oh, my God.
Yeah, that's pretty legendary, Flips. I can't lie. You definitely have this open trading mastered, and even just day trading in general.
For people to know, if the stock is in between levels, there's no clear resistance, there's no clear support at pre-market, it's just in between levels, then you don't take no trades at open. You wait for the next leg, which is that bear flag break, and that will be your first trade on that stock.
I want to note, Flips, on that point. You're saying you don't take a trade in between levels. That's something that we talked about earlier. Is Flips doesn't take trades between levels, and neither do institutions. We talked about scalping a little bit ago on Tesla, and they don't trade the middle of ranges. They wait for the extremes, and that's when they accumulate positions. So if that's when they're trading, that's where you should be trading as well, right? There's no benefit in trading the middle of ranges unless for some reason you have some kind of conviction or you're trading a bounce off a level or whatever it might be. But institutions accumulate and distribute positions at key levels. So that is exactly where you should be participating in trades as well. So sorry to interrupt you, folks. I just wanted to mention that because I thought that connection was pretty cool that you mentioned that. Somebody has a quick question here. You've noticed the most callouts in the Discord from the analysts are almost always puts. Is that just because the market is so bearish at the moment, or puts are just better to trade than calls? It's funny, if you were in the Discord about a year ago or 2 years ago, you would probably be like, wow, most of the callouts are calls. Mainly puts are just, that's the trend. The trend of the market currently is down. So for the most part, when you're trading with the trend, you're usually already have an advantage. Following the trend usually offers better reward and lower risk. However, fighting the trend can offer better reward, but higher risk. Or should I say, following the trend has lower reward and lower risk, but fighting the trend has higher reward, but higher risk. So, there's two ways to look at it. But ultimately, I like to believe that our analysts are always looking for the best setups. At least I know Flip is always looking for the best setups because he's always finding them. Any trades based off of that.
That's good that you mentioned that. That's so whenever we see a trend, the trend has been bearish. So position sizing, and I know this is not about this position sizing, but position sizing when you're going with the trend, I go full regular position size. But today we play spike calls and QQQ calls as well, and they both paid because we played them from from a support. But our position sizing was 1/4 of the size
Mhm.
because the trend is on the going to the downside. We don't want to get screwed in between. So
Yeah, that completely makes sense.
it all depends how you want to play it. I called out some QQ calls and some spy calls as well throughout the day. They both paid, but our position sizing was 1/4 of the size because our trend is very bearish. So you also
That
got to
completely makes sense. Yeah, we'll have a lecture on position sizing too to discuss that in much more detail too. But that's a great point too, is when there's three main variables you can control in trading. It's risk, reward, and position size. And essentially, Flips is noticing, hey, when I'm fighting the trend, risk is higher, reward is higher. So in that case, since risk is higher, I need to manage the money that I put in this position by dropping it to lower my overall risk and still be able to attain a similar size reward considering risk is higher. Can that make sense to everybody? Josh says, Flips, can you help teach the indicators, the next indicators class too? Flips always pops in. We'd love to have him, that's for sure.
Yeah, man. If you message me, I'm always here.
Yeah, I hope you can make it. You're always welcome in my classes, in all classes too. Everybody loves hearing from you. Let's see. Nathaniel says, are my levels based, and he might be talking to you too, Flips. Are your levels based mainly on pre-market or is also support and resistance? I personally usually have a mix of both. So for example, on a name like MU, I'm looking at this long-term support, and this long-term support is lying at 48.43. And this might not be a pre-market low or previous day's low, but I know on the long-term charts, this is a significant level. So usually what I have is significant long-term levels marked out. And then I look at kind of intraday levels if I'm in a shorter term trade. So for example, I'll be looking for this significant long-term level to potentially enter. And then I'll also be keeping in mind of, are we trading below or above pre-market low? Are we trading below previous day's low? But I always have long-term levels as well, and important support and resistance or pivots, because those are just as significant, if not more significant than the pre-market lows and highs and et cetera. Can I show where in-between levels are? And if Flips, if you want to answer that question, feel free. What your levels are mainly based on, that is.
So I trade the exact same way. I have my intraday levels, whereas I'm always calling levels where I can see a bounce or support or resistance, and those are mostly from pre-market the day before, and then my main goals or my main targets will be in the hourly and in the 4-hour. I rarely start looking at the daily. I look more on the hourly and the 4-hour because I'm not a very good swing trader. So I know if I can catch trends in the hourly, I will hope for the hour. I will hope for 2 hours, like a runner. But I'm not gonna hold day. It's just not in me. It's not my way of trading. So I look at the hour 4-hour as well.
That's
but
funny that you feel like, I feel like you could be good at swings if you wanted to.
I called Tesla puts like 163 and MMA took with me, and we did, I think it was like 132% on the runners. And I went back to go look at those contracts today, and they were up. I think it was like 6,300%. I almost just started crying by myself,
See, bro, that's still a banger swing though. 100%. You can't go wrong with that.
Yeah, anytime there's no bank out there that gives you 100% on your money on the same day.
Hell no.
So
Hell
I mean,
no. There's nothing. There's no job. Nothing that can do that. Unless maybe you hit it big on the casino. Well, yeah, somebody asked about being in between specific levels. I just wanted to highlight this. Just for example, if you look at this pre-market low here on SPY, some price action in between, I don't know, I think this 381.33 is a dark pool level as well as a significant daily level. That's why I have that marked on the chart. In between levels would be something like this area, right? Where we're kind of just in this range, in the middle of this range, I should say. So if you notice that price is range bound between two levels, you need to play the extremes of this range, right? So here you can see we rejected this pre-market low. You got to be looking to potentially short this pre-market low once again when we revisit it. And when we approach the low of the range, you have to be thinking about longing the low of the range. Obviously, in this case, we broke down, but in most cases, you want to play the range until the wheels fall off. And in this case, the wheels kind of fell off right here. So yeah, playing in the middle of the range would be like this. So typically usually you're not going to see as much of an incredible move in the middle of ranges as opposed to at extremes of ranges or at specific key levels. Does that kind of make sense? And this can be applied to multiple different time frames. This is just one example that I just kind of thought of after looking at this chart. But yeah, this is kind of the general idea. Any other questions? We went way deeper into volume and price action than I thought, but I'm really stoked we did that, Flips, and I'm stoked you pulled up and helped motivate the group to want to go this direction. We have so much more to talk about for indicators, but we'll spend more time on it all next class. What chart is the best for finding these trends and such? Ooh, Flips, you want to answer that first? What chart is best for finding trends? I mean, I think you kind of already did, but if you feel like answering, you can, and if not, I'll go first.
What charts? I don't get it. What do you mean? What charts? In what?
I think time frames. Time frames.
All right. So me personally, I look in the hourly and in the 4 hours.
I knew you were gonna say that.
Yeah, hourly and the 4 hours is where I look the most. I'm usually in front of my computer around 9 o'clock. I just don't log into VC until like 9:20. Because the last 10 minutes, usually some levels get broken and then it's pointless for you to be calling out levels. So, but I'm looking at the hourly and in the 4 hour, and then my trades, I'll take them in the 5 and the 15 minutes. So
yeah,
that's how I trade.
Honestly, it's the same thing for me, except I actually don't really like the 4 hour for some reason. I usually look at the hourly and the daily and the weekly when the weeklies are getting close to closing. And then I take my entries on the 5 and the 15 minute. But yeah, effectively the same general idea as Flips for me as well. I like the hourly a lot. I did answer the question. If I was going to be stuck with one time frame forever, it would be the hourly chart. I think the hourly is one of the most versatile time frames because it's enough to show you what happened in a whole day and also enough to show you what's happening intraday as well. But that's just kind of my what if scenario. Any other questions? I mean, is there anything else you think we missed? I think we talked about a few good points with volume with good examples, Flips. I mean, we talked about bouncing on support with volume, resistance, volume back breakouts. Is there anything that we're missing, Flips? I don't think so. I think that's kind of pretty much the most important things to keep in mind. But I hope this lecture helps everybody realize how important volume is, because I didn't necessarily plan on talking about this tonight, but I got excited about one example, then Flip shows up, and then we get excited together. And then here we are an hour later with the lecture on volume. So, I mean, volume is something that some of the best traders are giving the most weight to, whether it's volume or level twos or time and sales. There is some people that trade without volume. I don't know, like Tony, for example, trades without volume. I really don't know how he does that. I don't understand. I can't really imagine doing that, but it's important to note that one indicator doesn't always work for everybody. Some people don't like volume, and that's perfectly fine, but I can't imagine trading without it.
Yeah, I look, number one, my thoughts, the way that I trade. Number one, I look at resistance and supports. Number two, I look at patterns. So if I have a bear flag, I have, like today NVIDIA, a bear flag rejecting my support. And then number three, the final thing that I look to confirm before I enter is the volume. So that's how I trade. Resistance and supports first, because you need to know which way the stock you want it to move. The pattern that you're looking for, if it's a double top, double bottom, bear flag on the 15, whatever you're building, and then volume to support your thesis for you to get in. Now, key points, guys, key point for anybody. Once you enter a trade, respect your goddamn stop loss.
Yep.
And
yeah.
That's gonna be a different lecture. I guess I'll join Tostie, but respect your stop loss. And if it comes back, then you re-enter. But always respect your stop loss. Don't guess and wish. Hopefully, what that's going to go your way, and then it's going totally the opposite way.
Yeah. When you that's what I always talk about too, Flips, in the trading plan lecture, is if you make a plan, follow it. because there's no reason to waste your time making a trade plan, planning out a great trade, and then not following it. What's the point? You just wasted your time. Is this lecture recorded? Yep, all lectures are recorded and they're going to be posted. I'm going to actually try and get this class up by tonight. So we'll see if I can do that. Maybe tomorrow. Super informative class. Thank you, Chris. Make sure before you guys start heading out, please show some love to Flips. He just shows up to these lectures because he wants to help. I mean, that's kind of why we're all here, but nobody invites Flips and tells him to show up. He's just here. So show some love to Flips. He's doing literally everything he can for the community. So he's an awesome guy. So send him some love for being here and sharing his amazing knowledge. I mean, it's awesome having you in here, Flips, for sure.
One thing that I always think about is that the more you give, the more blessed you are.
100%.
So if I put a lot of my time to help others, then maybe not tomorrow, maybe not Wednesday, but maybe Thursday, I'll have a blast of a day trading because I put my time to help other people. So that's just how,
I agree,
that's
bro. Yeah. You put good energy in the world and it comes back. It comes back for sure. I 100% believe in that as well. Oh, somebody says thanks for the $900 gain today. I think they're probably talking about you, Flips, because I didn't post any trades today. So it's probably it's probably Flips that got Alice 900. So thanks to Flips for that. But
yeah,
really,
we had a banger of a day. Shout out to
let's be real. One thing I want to say is Flips is a great analyst. Everybody in here, all the OOT analysts are great. But at the end of the day, we're not making the trades. You guys are placing the trades. You guys are clicking the buttons. So give yourself a pat on the back for executing well, for having the knowledge to be able to execute great trades. And, we're just a community here. So it's great to be able to all be involved. And sometimes we get to take similar trades and that's great. But yeah, we're definitely happy to have you. Somebody says how to select strike prices. I have a whole lecture on talking about that. At least on a beginner level. That's in the beginners tab, and it's should be the basics of stock options or selecting options contracts. Actually, is right before that. Where Flips trades? Discords or voice? I'll show you. So Flips, we're trying to work something out where we can post some of his trades in his tab, but since he's so busy, he can't really, and since they're so quick, they are kind of hard to post. But Flips lives in this Flips VC. He's always here, always hanging out. I mean, literally, Flips, you're on vacation right now, right, bro? I just saw a picture of you at the beach.
Yeah, I'm actually in Fort Lauderdale Beach. Fort Lauderdale Beach down here.
Oh, Fort Lauderdale, in Florida.
Bro, on one lecture I'm going to talk about with everybody is credit card points, credit card status. But I don't really that's where I'm at right now. And I have a big ass suite facing the ocean. I'm just outside because my wife is putting my son to sleep. So I'm just enjoying talking to you guys out here.
Bro, you got to have a lecture with Mario about credit cards, bro. That guy is the king of credit cards too. And traveling. You guys both probably.
Yeah, man.
You got to chop it up with Mario about that, bro, because he's always in the airport lounges. He's got the credit cards, bro. He's got all the points. That guy, he's a finesser.
That's a whole new world. But yeah, I'll speak to him if you ever want to do a lecture. And if you guys want to learn about that, is amazing to pay $200 for a $1,500 room.
That's crazy, bro. Yeah, I know. I 100% know Mario will be down to talk about that with you. No doubt in my mind. Damn, Josh started last week and 30% of your port following Flips. Hey, just remember, withdraw that money. Make sure to pay yourself.
Let's go, Mario.
Let's go. That's sick. Well, hey,
thank you so much for having me, brother. I appreciate you.
Hey, Flips, thank you for being here. And the chat, hope you guys show some love to Flips for showing up as always. And Flips, I'll join you on VC tomorrow. I'll be there with you. I'll just be listening in and seeing what we find.
All right, brother. I'll see you guys tomorrow.
Yeah, enjoy the trip, bro. Thanks for coming as always. All right, well, hey guys, we're gonna wrap it up from here. This lecture totally went off in a different direction than I thought it was going to, but I'm super grateful for it. I hope you guys all enjoyed. And next week, instead of doing trends like I planned on, we're going to do indicators part 2. So we'll talk about some more indicators. We'll talk about the RSI, MACD, moving averages. So yeah, I'm super stoked. We talked about volume, price action today. I think this was a great lecture. And yeah, guys, I'll be hanging out with Flips and VC tomorrow. I probably won't be talking. I'd like to let him run the show. But yeah, guys, it's always been a pleasure. Thank you guys all so much for attending. We know that you guys choose to have your subscription here with OOT, so we always try to make it as valuable as possible. If there's any way that we can ever improve things for you or cater the content more towards you or something that you'd like, please reach out and let us know what you'd enjoy to see, because we don't know if you don't tell us. So please let us know what you'd like to see. We always like to make the subscription as valuable as possible for you because, again, it's your choice to be here. Nobody's forcing you, and we just want to make sure that you are getting a lot of value from being here. So again, we thank you guys for the time that you spend in lecture with us. And yeah, so hope to see you guys all. I actually have a lecture tomorrow. We're going to do some charting. So yeah, hope to see you guys there. And yeah, have a great rest of your evening. See you guys all soon. Thanks again.